because in the budget, if the fiscal deficit has been kept under the cap, probably we may not see that steep increase in the borrowing cost, and it may be probably a marginal increase in the borrowing cost. So I think let us wait till the March, and then we probably will draw up the strategy if we need to do anything.
Right. And very lastly, Mr. Choksi, going ahead, do we expect GRU to deliver 25% plus ROEs? And if you see in terms of where the loan book growth is concerned, probably a 25% plus CAGR in the next 2 to 3 years?
I think I'm very optimistic, for the loan asset growth to, reflect a better or a higher growth probably in the next financial year from the second half of the financial year. We believe that, all the announcements which the government has done and the positive impact of it on the real estate sector should start reflecting in terms of the supply, probably in the second half of the next financial year onwards. So probably I think we can expect, more than 20% loan asset growth going forward from the next financial year.
Right. All right, Mr. Choksi. Pleasure speaking to you and good luck for the coming quarters as well. That's the management of GRU Finance. Pretty much optimistic in terms of where FY19 is concerned. Yes, there is lingering effect in terms of GST as well as demonetization that has continued to play its role, stock down around 8% as we speak. But let's quickly shift focus in terms of Morepen Laboratories as well. Sales have gone up by around 1.8%. Profits have improved by 2 times. If you talk about the finance cost as well, that has gone down by around 60%. Margins have improved and come in at 12.8% versus 11%. But let's quickly connect with Sushil Suri, who's the CMD at Morepen Laboratories. Stock is well seeing gains of 2.5%. Welcome to the show, Mr. Suri. To start off with, firstly, what has worked to get such an improvement in terms of profitability as well as margins?
Good morning. Of course, we have seen that even though the top line is almost flat, only 3% growth, the margin increase is coming from the product mix. So basically, during the quarter, so the product mix has changed. So there's a more robust sale coming from atorvastatin and rosuvastatin in the API segment. And within the API segment also, domestic sales have gone up, which is giving us better profits in these 2 products. And second is that there's a good jump in the diagnostic business. So diagnostics is which is giving us, I would say,
okay,
to the bank. The diagnostic business has grown by 59% during the quarter, and for the 9 months also, diagnostics has grown by 49%. So these are the 2 main factors. And as you have seen that performance has improved by way of EBITDA, and second is the interest component has also come down.
Right. So, Mr. Suri, as the interest cost has gone down, what's the kind of debt that you've managed to repay during the quarter, and where does it stand now?
During the quarter, we have paid around 35 crores debt servicing total, including interest and principal. So we are only 21 crore debt is left. So 21 crore will be cleared over the next 2 to 3 months.
Right. And very lastly, going ahead as well, you've got a US FDA approval for an asthma drug. How big is that opportunity going to be?
This is a 2,000 crore market which is readily available for us. So we expect that the order should start coming in the Q2 of the next fiscal.
Right. All right, Mr.
Supplies may be going in the Q3, but orders will start coming in Q2.
Right. All right, Mr. Suri. Thank you for speaking to BTVi. So, an entry into the 2,000 crore worth of market that they've got for Montelukast, which is an asthma drug. Second quarter of FY19 is when they will start receiving orders, and commercial production in dispatches will start to happen from the 3rd quarter. So, that's in the second half of FY19 is when we could see revenue recognition happening for the asthma drug as well. But overall, the stock is well seeing gains of around 2.2% on the back of the debt repayment that they've done during the quarter, on the back of which the finance cost has gone down, and that is what has improved the profitability, as well as the product mix as well is pretty much working in for Morepen Laboratories. But completely out of time. With that, it's a wrap on this edition of Corporate Eye. Thanks for watching, and lots more lined up on the other side. Please stay tuned.